Stocks don't move straight up or straight down. They move in waves along the way of the trend line. We all know this. How can we take advantage of it? There's an indicator called the MACD, which looks to showcase the momentum of the waves of a stock. And the classic idea of this indicator is that you buy when it's down and weak, and you sell when it comes from up and strong, and you make money doing that. Today, we are going to utilize code. We are going to backtest the MACD indicator across different time frames, across different tickers. We're going to see if the classic ideas work, and we're going to see how we can make it profitable. Welcome to the indicator trials. Alrighty, so jumping into the charts, you can see our MACD indicator here. Once again, what this indicator is doing, it's a momentum indicator hoping to capture the waves of the momentum of stock moves, right? So it's got a average, the more yellowish, kind of palish line here is the average value of the MACD. The blue line is the current value. And then this histogram, what these bars are called is the histogram, is the difference between the current value and the average. So it's a showcase of when the momentum begins to start coming closer, when these lines start coming closer together, when they're spreading further apart. That's what the kind of oscillation within the histogram is showing, and is hoping to capture, once again, the momentum and the volatility of the waves of a natural stock move. Now, the first thing I'm going to backtest with code, one of the big basic beginner teachings of the MACD indicator, is to buy when the indicator starts to go. So let's call it here. Buy when the histogram is red and ticks down. So when the flow starts to move back up in the histogram, it would get long here, and then sell when the histogram starts to come down, when that average starts to get closer to the value. So it would look to buy here, sell here on the histogram. I'll code it real quick. We're going to test all the examples of when that happens across different time frames, and I'll be right back. Okay, so coming back into it now, looking at the same subsection of SPY we were looking at before on a 2-minute chart, you can see now the indicator is buying when the histogram value comes up from previous bar. It is getting in, and it's exiting when histogram value gets lower than previous bar. So it got right back out of this trade before getting back in, back out. As you might be able to tell from your screen here, you take a ton of trades trading like this. The histogram isn't always this picture perfect. It's not always these beautiful moves like this, and this is why we do this series here on this YouTube channel, where we backtest every example. As you can see here, it takes a ton of trades. This is a 30-day 2-minute chart on SPY. It takes a ton of trades, and on top of taking a ton of trades, it doesn't make money. Once again, buying when histogram ticks up, selling when histogram ticks down. Buying when histogram ticks up, selling when histogram ticks down. You see, this is one of those picture perfect examples you would see in a textbook, right? This is a pretty textbook MACD move. Okay, wave down, buy when it starts to wave up, sell when it starts to wave down. Yay, look at how good the MACD histogram works. But point of this series again, test it when it happens across all scenarios. And as you can tell here, not a profitable way to trade this strategy. Let's go ahead and look at the 5-minute 180 day to kind of zoom out across a larger time frame. Is now 180 days. Should be plenty of data to backtest something. And as you can see, still taking a ton of trades, still losing money. Let's go ahead and flip around different stocks. Let's look at Apple. Losing money, taking a ton of trades. Let's look at Microsoft, losing money, taking a ton of trades. Let's look at Tesla, losing a lot of money, taking a lot of trades. Let's look at Target, losing money, taking a lot of trades. So, seems like trading the MACD in this way, trading it, utilizing it to long when the MACD ticks up, and selling when the MACD ticks down, might not be the best use of indication of this strategy. Now, we're going to test what was in the image at the beginning. There's a 0 line in the MACD. When your value crosses, yes, I said it right the first time. When your value crosses this average line, the histogram goes from positive to negative and vice versa. There's a system that trades the MACD, just like the one I showed you in the beginning, that does this. When the MACD averages cross, when you cross the 0 line to the upside, you long. When you cross the 0 side to the downside, you sell. We are now going to code that, move into that system rather than just the histogram ticks, and we'll see if the 0 line cross MACD performs any better. Okay, we are back, and as you can see here next to my head, the floating P&L, the P&L of the trades taken using this new system, are green. This is still the 5-minute, 180-day chart on SPY, and we are now green. Now, it's not in any way a profitable edge. It's not meant to be a profitable edge. This is not, once again, this whole series is not meant to find single indicators that will be profitable edges, at least not yet. Maybe if this series continues to see a lot of love, we'll start to combine indicators and maybe we can look to find real profitable edges. Right now, we just are looking for the best way to play individual indicators so that we know how to utilize them in our full trade plan. So now the indicator is buying, the strategy is buying when the indicator crosses the 0 line. So when the value line crosses above the average line, when the histogram crosses from red to green, the system longs, and it sells vice versa. Value line crosses below average line, histogram goes red-green. So this seems to be a better way to play this strategy, and this is one of the most commonly practiced and taught ways to play this strategy. The one I showed you before is as well, but it seems that this way, the 0 line kind of buy and sell works a lot better. Let's go ahead and go to the 2-minute 30-day. Look at this. Actually, not working too well on the 2 minutes. Let's go ahead and flip out to the daily as well. Let's make sure we're getting into some swing trade type stuff, swing trade type time frames as well with this video. And it looks to be working. I mean, it works, right? It makes money, but once again, the buy and hold strategy of the last 5 years is up 16 grand. This strategy, literally just buying and selling the MACD at 0 line crosses, is up 10 grand. So it's underperforming buy and hold. So I still wouldn't call it a daily. I'm just going to go swing trade like this and I expect to make a bunch of money. I still wouldn't call it that. Once again, not the point, but it's important to look at those different time frames anyway. But let's go ahead again and flip through some different tickers. On Microsoft, it's barely green, but with the histogram up and down tick that we looked at before, it was red on Microsoft, so this is still a better way to play it. Very similar story on Apple. Tesla was big red the first time around when we were looking at the histogram ticks. Now with the 0 line strat is actually quite green. And then Target is small red, but outperforming the way we looked at it the first way. So it seems that utilizing code, utilizing real backtesting, once again, not just cherry picking the perfect example and going, look at this strategy, utilizing code, showcasing the strategy being traded every single time it happens over X amount of time frame seems to show that utilizing the MACD to be bullish when it crosses to the bull side, when the value line crosses above the average line, when the histogram goes from red to green, seems to be a relatively decent indicator for when to go long on a stock. And then as well, when the value line crosses below the average line, when the histogram goes from green to red, seems to be a decent time to sell your stock. So the MACD indicator, just kind of out of the box, not a lot of ploys with this, not a lot of bombshells with this one, seems to work pretty well when you play it around this 0 line. So let me know your all's thoughts and the way you all utilize the MACD indicator in the comment section down below. I'd be very interested to hear that, and maybe we use some of those ideas in future videos. Hit the like button if you enjoy this video. If you enjoy this series, I would love to keep it going. I think this is a great way to get into some real study of indicators, right? To get into some real information, not just drawing pictures like this, but to get into some real coded actual trading information so that we can start to find the best way to play some of these common indicators. So hopefully you guys enjoyed as well. Hit like, hit subscribe. With that being said, I'm going to go ahead and sign out of this video. I will catch you all in the next one.